Let us now see how problem 6b is solved. The controller of Mercury Shoes Inc. instructs us to prepare a monthly cash budget and supporting schedules for June, July, and August 2016. And on the basis of the cash budget we will prepare, we will make a recommendation to the controller. Using the figures given in the problem, we will first put together the data needed to compute the estimated cash receipt section and create a schedule of collections from sales. The budgeted sales of Mercury Shoes Inc. are $160,000 for June, $185,000 for July, and $200,000 for August. Accounts receivable as of June 1, 2016 is $198,000. $48,000 from the accounts receivable came from the sales in April, and $150,000 came from sales in May. The company expects to have 10% cash collection from its current month's sales, and the remaining 90% will be made on account. Out of the sales on account, 60% will be collected on the next month after the sale, and the remaining 40% will be collected after 2 months. So, for the sales in a particular month, 10% will be collected in cash, 54% will be collected on the next month, and the remaining 36% will be collected 2 months after. Let us now create a schedule on collections from sale for the 3 months ending August 31, 2016. In the first row, as computed in Note A, for the month of June, its 2 months prior is April. This means that the $48,000 portion of accounts receivable from April sales will be collected in June. It would be understood that this $48,000 is actually 40% of the 90% April sales made on account. For the month of July, its 2 months prior is May. The remaining $150,000 of accounts receivable is the 90% of the total sales in May. This means that 40% of it, or $60,000, will be collected in July. For the month of August, its 2 months prior is June. So 36% of the total sales in June, or the 40% of the sales on account, will be collected in August, which is $57,600. In the second row, or the cash collected from prior month's sales, the remaining $90,000 of accounts receivable from May sales will be collected in June. 54% of the total sales in June, or 60% of the sales on account in June, will be collected in July, which is $86,400. The 54% of the total sales in July will be collected in August, which is $99,900. Adding the cash collected from 2 months prior and 1 month prior sales on account will result to the total receipts from sales on account of the month. These would be $138,000 for June, $146,400 for July, and $157,500 for August. As for the cash sales with the computation in Note C, these would be computed by multiplying 10% to the current month's budgeted sales, which are expected to be collected on the same month of sale. Now, adding the total receipts from sales on account and the cash sales will result to the total receipts from sales per month. For June, the total would be $154,000, $164,900 for July, and $177,500 for August. Let us now see the relevant data for the manufacturing costs. The budgeted manufacturing costs are $66,000 for June, $82,000 for July, and $105,000 for August. $12,000 for depreciation, insurance, and tax expenses is included in the manufacturing cost per month. Accounts payable as of June 1, 2016 is $13,000. The company plans to pay 80% of its manufacturing costs on the same month they are incurred, and the remaining 20% will be paid on the next month. Let us now make the schedule of payments for manufacturing costs. For the payment of prior month's manufacturing costs portion with computation in Note A, the payment of accounts payable incurred in May will be made in June. 20% of the manufacturing costs in June, which is $66,000 less $12,000 for depreciation, insurance, and property tax expense, is equal to $10,800 and will be paid in July. We deduct the $12,000 in computing the manufacturing costs payment per month because depreciation is a non-cash expense. Payment of annual insurance premium was done in February, and payment of annual property tax expense is still in November. Thus, those three items are not relevant in the preparation of the cash budget for the months of June, July, and August. So 20% of the $82,000 manufacturing cost less $12,000 for the month of July is equal to $14,000 and will be paid in August. For the payment of current month's manufacturing costs, the computation is total manufacturing cost of the month less $12,000 and multiply the result to 80%, as shown in Note B. Adding the payments of prior month and current month's manufacturing costs will result with the total payments for each month, which is $56,200 for June, $66,800 for July, and $88,400 for August. Let us now initially prepare the cash budget for Mercury Shoes Inc. for the 3 months ending August 31, 2016. The amounts reflected in the estimated cash receipts from cash sales and collections of accounts receivable for each month was derived from the schedule of collections from sales. The amounts reflected in the estimated cash payments was derived from the schedule of payments for manufacturing costs. Additional data for Mercury Shoes Inc. are selling and administrative expenses of $40,000, $46,000, and $51,000 for the 3 respective months. Additional capital expenditures of $120,000 will be paid in August. Cash as of June 1, 2016 is $42,000. Marketable securities as of June 1, 2016 is $25,000. Income tax payment of $24,000 will be made in July. Quarterly dividend payment of $15,000 will be in August. It could be observed that all expected transactions are cash outflows. No additional cash inflows is expected other than those collected from sales. Finally, the minimum cash balance the company wants to maintain per month is $40,000. Let us now input the additional data in our cash budget. Since there is no additional cash inflow given, the final total cash receipts are $154,000 for June, $164,900 for July, and $177,500 for August. So let us proceed to the estimated cash payment section. Input the amounts for selling and administrative expenses after the manufacturing costs row. Next is the $120,000 capital expenditures in August. Next is the payment of $24,000 income taxes in July. Lastly, the payment of dividends in August, which is $15,000. Total the manufacturing costs and the additional transactions to come up with the total cash payments. Deduct the total cash payments from the total cash receipts to obtain the cash increase or decrease per month. The beginning cash balance for June is $42,000, as provided. Add the beginning cash balance to the cash increase to get the cash ending of $99,800 for the month of June. This will become the beginning balance in the next month. The same process will be done for the months of July and August. Next, input the $40,000 minimum cash balance per month. Add this to the ending cash balance per month to get the cash excess or deficiency per month. The results are cash increase of $59,800 and $87,900 for the months of June and July respectively. For August, there is a cash deficiency of $9,000. With a cash budget prepared, we could now give a recommendation to the controller, which is the cash budget for the months of June and July resulted to cash excess of $59,800 and $87,900 respectively. These can be invested by the controller in marketable securities. Meanwhile, the cash budget for the month of August showed a deficiency of $9,000. The controller could borrow from the bank the said amount to make the cash sufficient to pay the company's obligation during the month of August.